Okay, thanks, Neil, and thanks everybody for taking some time out of your day to join me for this presentation. My name is Neil Marotta. I'm co-founder, president, CEO of INDIVA Limited. We're a licensed producer out of London, Ontario. We specialize in edibles, which you can see from the first page of our deck here. We've actually added a little graphic of the Wanna Quick Midnight Berry sleep gummies, which are new to market. Very exciting, and you also see the jewels here on the front. So today what I'm going to do is I'll run through the presentation, try and get through it in about 15 minutes or so, leave plenty of time for Q&A, and hopefully you'll come away today with a sense of just how big the opportunity still is for INDIVA and for the edibles category in particular. We don't only sell edibles, but it's about 90% of our revenue, so that really drives our business. And we're excited to talk, or I'm excited to talk a little bit today too as well about some of the new products we have coming down the pipeline for late Q2, second half of the year. I'll let you read this disclaimer at your own leisure. So we are number one nationally in edibles. Our market share is around 37%. We're a top 10 LP across all categories. Our market cap today is actually only around 40 to 45 million, so quite low. And we'll walk through how low that really looks compared to some of our competitors. Insiders own about, and including folks on the board directly and indirectly, north of 20% of the company. So our money is absolutely where our mouth is. These are some pictures from our facility. We haven't changed this slide in very long, but hopefully we'll add some new pictures on the next go around. We've got some new automation coming in that I'll speak to, and that's probably as interesting as anything on here. This is pretty much my favorite slide in the whole deck. So this shows really our quarterly revenue going back to early 2019 and how we've grown. You can see in 2020 we began selling edibles and had that first step up. And then in late 2020 we began selling Wanna gummies. And so we had the second kind of step up in our revenue growth. Q4, we'll get through some numbers here, but the market was very good and our market share hung in there. So we stand by our guidance for sequential revenue growth in Q4 from Q3. And we're very hopeful that this will actually be record revenue given the, all the numbers that we're seeing. The dust hasn't settled yet, so we're not necessarily changing our guidance, but we feel pretty good about where Q4 is going to land. Going forward throughout 2022, our goal really would be to clear 50 million of net revenue. So you can do some math on your own on what that means. We still are striving to get to 40% gross margins for the year. And our goal really is to turn earnings positive in 2022, earnings per share, legit earnings per share. And that's our goal to get there. What will drive that revenue growth really will be new product introductions, not just new SKUs, but also new brands. We are in all 13, sorry, I should say we're in 12 provinces and territories. We just registered with Nunavut. So as soon as we ship something there, we will be in every province and territory in the country. So this is really a story about revenue per store, and that's driven by SKU growth and product growth across the board. On the margin side, a big part of the 2021 story was falling input costs, primarily distillate. For 2022, margin improvement will come from continuing to be very disciplined on costs and efficiencies, but also implementing automation at a much larger scale than we currently have. That should help lower our direct labor costs and boost our margins. We've shown this slide for a long time now because this is really the target. Looking at mature markets, the edible category is in the teens and dominated by chocolate and gummies. That is not unlike what you see in Canada. I'm just going to flip ahead one more slide. However, in Canada, edibles still only represent around 5 or 6% of the total pie rather than sort of that mid-teens number. So the just backing up a slide here, sorry to give everyone a headache, but the overall market now, if you look at December's number where we had a real big spike in edibles and in the overall market, which is then backed off in January. Not abnormal, right? This is December last year. This spike is December of 2021. Sorry, this is 2020. This is 2021. So the market is somewhere around 4.5 billion annualized. January's number was quite low. That hits 3.7. So the overall market we expect will still double over the next few years, and we think the edible category will at least double as a percentage of the total. So that leaves 4 or 5x revenue opportunity in front of us. So that's a really great opportunity. Just looking at this chart a little more deeply, as I said, January did roll over from a huge month in December. That is not abnormal. We saw the same kind of impact on our sales in January, but I'm happy to say that the purchase orders have rebounded smartly in February. So we think we'll have good growth in 2022. I think I covered this slide, but if there's one thing I'd like to point out is that we continue to see this kind of nice steady climb from the bottom left to the top right. What this means is that the growth in edible sales continue to, not every single month without fail, but generally as a trend, continue to outpace sales growth of the rest of the cannabis industry. So that's very positive for our business where we're so heavily focused on edibles. Looking again at comparing gummies, chocolates, and the other category, that other category of non-chocolates and gummies remains stubbornly low. I'm happy to see, we've brought some baked goods to market. We've seen a lot of other LPs bring innovative products to market, which is very positive. And I think over time you'll continue to see that other category expand closer to that 20 or 25% in time. Looking again at, sorry, this is for January, not December, but looking at January, we were 12th overall amongst 143 LPs. So we're very proud of that performance. And I would encourage investors to take a look at the total amount of capital employed and the total asset base to achieve the market share and revenue run rates that they've gotten to and the profitability that goes along with it. I think we've done a lot with a little. This is one more look at our market share. You can see we hit a record market share in December, rolled over a little bit in January, but still pretty good. That's overall. The edible category, we actually bounced back a little bit in January from December, and very happy to see our market share sort of holding in the sort of mid to high 30s. In gummies, we're still north of 40% market share. Chocolate, we're at 34%, and baked goods down to 32%. That's for the month of January. So still leadership in across the board and in all of those subcategories as well. This is another look here. So the top table, which is courtesy of Raymond James, shows on a consolidated basis, we are in the top 10, and that was through Q3. The bottom charts, have to admit, I stole these right out of a Stifel report, and I believe they reference headset data showing we were, I think, tied for 10th overall in the November through January period. So that's much more recent data. And in Ontario, we were actually 9th overall in our market share, which is very good. We're very happy with that. And hopefully we can keep climbing. I talk about our team pretty often. We have a fantastic team of experienced folks in finance, operations, sales, and marketing. And very happy to see also that we haven't seen a lot of turnover in the top ranks of the company over the last couple of years. And that stability has really helped us plan for the future. And, I would expect that to continue. So getting into some of our products and brands, you'll notice a new one on this slide is Groon. I know it looks like it says Grown, but it's actually pronounced Groon. That is the licensing agreement that we signed in December. Groon is a female founded and operated company out of Portland, Oregon. They sell and distribute their products across 4 states in the US. And they really have a combination of things. They do chocolates and gummies and some other products that we look forward to bringing to the Canadian market. We expect to launch these products. Earliest would be sort of late Q2. I think Q3 will probably be our first quarter of at least launching some of the Groon gummies. And we'll get into some of those products in more detail. But we think Number one, these products lend themselves to being at a lower price point than some of our existing gummy products in market. So we think that's very positive, having this barbell approach. And Grün also incorporates a lot of minor cannabinoids in their products, and I think you're going to see a stronger trend in 2022 towards things like CBN, which is helpful for sleep, which is a key cannabinoid in the Wanna Midnight Berry gummies, or CBG, which has not really caught on much yet. Yeah, I don't see too much of it, but I think later in the year and into next year, you're going to see those products become more popular. We also have, obviously, our Bang brand and Wana. Those are both licensed deals. Artisan Batch is an in-house brand. Slow Ride is more of a distribution deal with a LP based in Ottawa, Ontario. And I'm happy to say we finally launched Jules from Deep Cell. Those are in market now in Ontario and will be going out west before too long. And later this year, we're looking forward to finally launching the Ruby Sugar, and we'll get into that more specifically in a minute. So you see our 1.0 products up top. We still sell INDIVA pre-rolls and capsules and Artisan Batch flower. We'll be coming out with a new pre-roll product called a Rainbow Roll, which will, let's say, alternate strains over time. That'll be a multi-pack. Beneath that, you see our Wana portfolio, which I'm very proud to say is up to 13 SKUs now. We would expect several more SKUs to be introduced in 2022. Both classic SKUs, multi-pack SKUs, and also more quick SKUs. We've got 2 more flavors launching towards the end of Q1, lemon cream and a island punch that we're looking forward to seeing, and those have been accepted by the provinces. So look for more Wana products hitting the shelf first half of the year. Moving on to Bang Chocolate, we've had more SKUs accepted by the provinces. This is still was the first edible we ever sold. Bang is still the #1 chocolate in Canada, and we'll look to continue adding SKUs here, including seasonal SKUs, right? So we had a candy cane white chocolate that came out towards the holidays, and we'll look to do that again later this year. This is the Slow Ride cookies. Again, we have 2 seasonal SKUs here, which you'll have to act pretty quick to find them now. They're pretty much sold out or gone. Pardon me. But below that here, we've got just a sneak peek at the Grün gummies, which are called Pearls. These are gelatin gummies, so it's a little bit different from some of the gummies out there like Wana, which are made with pectin. So obviously these won't be the choice for folks that are vegan, but we know there is very large demand for these products. A little further to the right here, you see the Pips. These are candy-coated chocolates, not unlike Smarties or M&Ms for candy lovers out there. And so that's a product that we'll probably launch later in the year. A little bit tough to launch a chocolate product in the middle of the summer, but we're very excited to bring that product to market. We aim to have a lot of uninfused samples available for trial at Lift in May and at Hall of Flowers, which I believe is coming to Toronto in June. So if you want a sneak peek, look for us there. In between them, you see the Jules, which have just launched. We have a strawberry and a raspberry flavor, a 1-to-1, and a pure THC. That's more of a microdose product. And I think, not unlike the Pearls and the Pips, there's a market for folks that, while most people complain 10 milligrams is not enough, I still regularly get comments from folks about Wana gummies that one gummy is too much for them. So, both the Pearls and the Pips will more likely be in a 4 or 5 pack. The Jules come in actually a 10 pack, and these are really like a sweet tart. So a sour product, and that takes the Ruby Sugar, which you see on the right here. In this case, it's THC sugar, and that's combined with powderized fruit and pressed into a pill format. So we're excited to have those products in market. And with the CBD sugar that we intend to launch, we're probably going to go towards a much larger format. There are some single serve sugar products in the market now, which are very good, but for us, it might make sense to use a larger package. These are just some pictures from some of the trade marketing that we have in place. And so we we like to put assets in market as much as we can. We know that this is helpful for stores and for consumers in terms of understanding what's out there and what's available. So that's been very helpful to us. Yeah, maybe I'll just point out our CapEx. Just flipping through to the end here. Our CapEx for the year will be quite modest, despite bringing on new equipment to launch Pearls and Pips. We're looking at less than $1 million of CapEx for all of 2022, much of which has been committed and deposits made already. And then the large automation that we spent on last year will likely be commissioned towards the end of Q1. So we should start seeing some benefits on the margins, hopefully as early as Q2, but really in the second half of the year, we're hopeful that will kick in. We still sell, as many units as almost any other LP in this country. Depending on the month, we're either number 1 or number 2 or number 3. When you exclude Quebec, we're consistently number 1 in terms of units sold. So even if we don't have the market cap that some of our peers have, we are an important supplier to the provinces. And so, without getting into specific details, when we submit, let's say 10 or 15 SKUs to a province, it's not abnormal for us to get 2/3 to 3/4 of those accepted. That's a very, very good success rate, conversion rate. So we're very proud of that. I think with that, Niel, maybe the best thing would be to turn it over to questions. So question number 1 was, if did I hear correctly that the full year guidance? Well, I wouldn't say it's guidance. I would call it a goal. So we don't do these calls to give guidance so you can hold my feet to the fire later. But our goal is to get to 50 million of net revenue for the year. Our goal is still to achieve 40% gross margins. We're not there yet. And yes, our goal for the year of fiscal 2022. So this is not quarterly guidance in any way. Is to get to earnings positive. So yeah, I mean, not official guidance, but that is absolutely where we're aiming. Okay, first question here in the question box. Are you the only LP that, I'm not sure if I understand the question. Are you the only LP of the products that you've acquired so far? Yeah, so I think I understand. All of these licensing deals that we have are exclusive. We've talked at length in the past about Cannabis' option to acquire Wana. I don't want to get into that again. We are the exclusive producer and distributor of Wana for at least the next 3 years. I say at least because it's not certain that we'll see federal legalization. It's also not certain that Cannabis will cause Wana to terminate our agreement at any point. And while I'm talking about it, I might as well get into it. But if federal legalization happened this year, which I think is still a stretch, but if it were to happen, the cash payout that INDIVA would be entitled to would likely exceed our current market cap. So even what might be considered a worst case scenario is not so bad. Next question: what brands do you own versus license? So we license Wana, we license Bang, and we license the Jewels and Ruby brands as well as Groot. Our in-house brands are INDIVA, Artisan Batch, and the INDIVA brand. Again, there's nothing stopping us from making an INDIVA gummy. There's nothing stopping us from making an INDIVA chocolate. There's absolutely nothing stopping us from innovating. We've done our share of innovation along the way, and we innovate with our partners. So it's not simply just a copy and paste or paint by numbers. A lot of the innovation to get products to market comes from our team in London. So we have the skill set. We've actually hired R&D folks and food scientists to help us with innovation down the line. But we always wanted to do this from a position of strength. So our goal really is to get to free cash flow positive rather than, let's say, wasting our capital potentially on innovation that is not well received. And then what do you do? So our philosophy in the beginning, and maybe still to this day, is that successful U.S. products will find success in Canada. I think that's proved itself to be very true. But it doesn't stop us from innovating, and we certainly will going forward. Next question: what would you say is the most appealing characteristic of your company? And the follow-up is: what are some things that brands look for to choose you as their LP in Canada? Good questions. Look, I think what's most appealing about our company is I think we're pretty scrappy. I think we're able to bring products to market very quickly. We signed the Wana deal in March of 2020. We had product in market by September of 2020. That's incredibly fast from having never made a gummy to national distribution in 6 months. That's exactly what we plan to do with Grön. We signed that deal in December, and we're hopeful that by June we'll have at least some products in some markets. So I think it's that scrappiness and being able to, let's say, accomplish more with less capital than our peers. And in terms of what are the brands looking for to choose us as an LP, look, it's been a very different conversation, right? I mean, the negotiation and the conversations we had with Grön progressed very quickly because we already had a very good track record. We are the #1 edibles company in the country. Our distribution is almost literally coast to coast to coast now, so as we bring on NDVA in the coming weeks. And we ship more units than just about any LP in the country, again, excluding Quebec, where we can't sell edibles. So I think all of those things, plus the reputation and their ability to contact some of their competitors and say, hey, did these guys do what they said they would do? I think we tick all those boxes. So yeah, that's appealing. Next question, what are the terms of your $23 million debt, interest rate, and due date? Is it convertible to stock? I think all of that is in the investor deck if you look at page 3, but that basically breaks down to $20 million of senior debt that has a 15% annual coupon that is not due for 2 more years. The remaining $3 million is convertible debt. That will come due at the end of this year. It's convertible mostly at 20 cents and some at 25 cents. And that's all basically directly or indirectly with insiders. So we're in good shape. Next question. What is your understanding of the chance of the Wanting deal not be renewed? I don't think there's any point addressing that question again. I mean, I can't put probabilities on what will or won't happen. It's our brand for the next 3 years in Canada, and we're going to do the best we can. What margins do you expect to exit the year with? Again, our goal is 40%. So, I would say that's roughly where we hope to be. Next question, are we launching a retail store at London factory? The answer is no. We thought about this for some time, but I have no interest in competing with our customers. We also need that space. We did dedicate a space for a Farmgate store once upon a time, and that's quickly turned into some very valuable R&D space. I think without that space, we might not even be in business today, to be honest. It is very difficult to excise, stamp, and label 1 million units a month for 12 provinces and territories. And that kind of knowledge and know-how is very significant IP to INDIVA and probably one of our most important skill sets. Next question, do you have plans for edible product format expansion, i.e. lozenges, compressed gum, powder pouches, similar to SNUs, or otherwise to capitalize on untapped traditional CPG product formats? Yeah, the short answer is yes. We do have plans. I'm not going to get into it now for competitive reasons, but it's not lost on us that some of our competitors have launched products that might be typically considered an edible, and yet have, let's say, used some regulatory arbitrage to get them into the extract category and getting around the 10 milligram limit. There's a lozenge out there. I reference it because you referenced lozenges. That would be one of the top, if not the top selling edible in the country. So if nothing else, I think that shows once potency limits change, and we're very helpful and proactive in changing them, I think you're going to see a big step up in edible sales in this country. But yeah, 100% we are looking at other formats, and you'll just have to stay tuned. Sorry, just bouncing around a little bit here. I think I've answered the question about what brands do you own versus license. When can we expect fourth quarter year-end results? Mid-April. We have a new auditor, and so we're trying to accelerate our reporting. We still would like to uplist at some point this year. We run a pretty lean company. Our G&A, I think, is arguably best in class, and so sometimes that means we need the full 120 days. But our goal is to report by mid-April. What is your stock-based compensation practice? Our stock-based compensation practice revolves around preserving every nickel of cash that we can. And fortunately, our board takes the vast majority of its compensation in stock. and any incentive compensation that we pay to senior executives also has been paid with RSUs. So when you see that those RSUs being issued, that's really preserving our cash, and that's a big part of the reason why we've used that program. I also like the optics of our employees having stock. Every employee in the company has, at the very least, stock options. Not because we want people obsessing over the stock price, but we want everybody invested in the same outcome, which is benefiting as shareholders with higher share prices. Next question: what other LPs keep you up at night? No LPs keep me up at night. Next question is, I'm a longtime investor and see this being greatly undervalued currently. Where do you see market cap going, and any extra upcoming advertising, et cetera, to create more awareness? I wouldn't expect any more advertising. I think if we've learned anything, there's a lot of investor relations initiatives that are just throwing spaghetti at the wall. It really can't point, other than what we currently do with Niel here and these type of events, and with Anthony. I think those work. I think hiring firms that are just going to make cold calls doesn't seem to do anything. Paid advertisement doesn't seem to do anything. I'm sure native ads have some impact, but they're horrendously expensive and only temporary. So going back to your first question about the market cap, earnings will increase our market cap. Getting to positive earnings will absolutely, and maybe this is just coming from the Peter Lynch school, but earnings drive stock prices. And I think if people want to know why this whole industry has basically been on a straight downtrend for 12 months at least, you could argue, there was a bubble last February based on some overly optimistic speculation about regulatory change in the United States. But very few companies are actually making real money. And when I speak to that, I'm speaking about Canadian LPs primarily. It's obviously a different dynamic in the U.S. Their tax system, the 280E laws down there make it very difficult as well to show net earnings. But in terms of where our market cap is going, if we hit our targets, people can do the math on what our adjusted EBITDA might look like and apply a multiple. And I certainly think the market cap should be well over 100 million by the end of the year, if not higher. Hopefully higher than that. Next question: INDIVA and Decibel's market cap are significantly lower than your peers. What reason do you attribute to that? Is it because of the exchange you're listed on? Yeah, it's a good question. I don't know that it's necessarily the exchange. I would also point to Oxley, that trades on the big board, and I think has a market cap that doesn't really coincide with with the market share that they've been able to attain. I think they've done a pretty good job. So yeah, I don't know that there's one specific reason. I mean, I like the idea of uplisting to the big board so that we're available to any and all institutions to invest in us. I also like the idea of reporting on the same cycle as most of the other companies out there. For those that don't know, if you're TSX Venture listed, you have 60 days on the end of each quarter and 120 days on the end of each year to report. On the TSX big board, it's 45 and 90 days respectively. So we'd like to get onto that cycle. The only other thing I maybe, Gord, on to your question specifically, is it probably relates more to research coverage and just general awareness about the companies. I don't think you can spend your way to that awareness. I think you have to earn your way to that awareness, and that's what we intend to do. Any progress on the move to the TSX? Yeah, good question. This is exactly what we're working towards. I wouldn't expect it to happen in the first half of the year. In fact, it will not happen in the first half of the year. But if we can, working with our new auditor, get our reporting timelines down to 45 days on the end of each quarter, then I think we'll pursue that. Next question: when will the Quebec edibles market open up? Great question. Hopefully sooner than later. I can't give you an exact date if it ever happens at all, but we know there was a new CEO in place at the SQDC. I have not had any direct conversations with the new CEO. But what I would say is that if Quebec genuinely has a mandate to eliminate the illicit market, I don't think they're going to be able to do that without offering edibles and without offering concentrates, including vapes, by the way, at north of 30% concentration. We sold some bubble hash products into Quebec, where we had to keep the total THC below 30%. I mean, shoot, there's some flower products coming out that are pretty close to 30% now in Ontario and other markets. So I would expect those rules to change as to when. It's a good question. Maybe it'll be around the same time we see federal change, assuming we do. So the next, let's say, 12 to 24 months. But that's pure speculation. But certainly that would fundamentally change our business. I would think it would add close to $1 million of net revenue per month to the company. So, look, I would look at that as just free upside and optionality right now in our stock. It's certainly not priced in, that's for sure. Next question, Artisan Batch is getting incredibly great reviews. As the number of SKUs expand from that brand, do you foresee it becoming a more important percentage of the company's revenue? I do, yeah, and thank you for that. I think the quality of product that we're bringing to market continues to improve. We're very happy with some of the recognition we got from the LIFT event in November in Toronto, pardon me, where people I think might have been exposed to that brand for the first time. We'd like to see that grow as a percentage of revenue. I think I obsess a little bit less about whether it becomes a certain percentage of our business and more about can we continue to grow this brand profitably. And so far, we've been able to grow the brand profitably, and that's exactly what we'll do. Next question, what do you expect will catalyze more robust growth of the edible segment in Canada? What should we look for in benchmarking this segment, sustained growth toward California-like share? Great question. Yeah, look, I think continued innovation will help. We have not seen really a lot of price pressure in edibles. We certainly haven't seen any on our end. And when you look at industry-wide stats, looking at average price, I actually think last month we saw a slight tick up. So maybe launching products more at the value end of the range on edibles will help grow the category or continue to grow the category. I think also bringing on innovation, things like minor cannabinoids will help. And then obviously the biggest piece will be the potency increase. Maybe that won't be the biggest, but certainly that will be hugely helpful. And that's probably a couple of years away, Michael. So those are the things that I would point to. Next one here, are you going to focus on expanding the non-edible market in 2022 by bundling or other strategic ways at the same time customers buy the edibles? I don't think so. I don't think that's necessarily... there are ways to pursue programs like this with retailers or retail chains. Typically, we don't like to bundle, unless it's a very special occasion or reason, we don't like to bundle Wana or Bang. These are industry-leading products, and so it's probably not in our best interest to bundle them. But it is a strategy that we use in certain markets, but I don't think that will have a huge impact on the company overall. Next question here. With the discussions that you have had with the federal government where you recommended an increase of potency in edibles, will any decisions on that in the near future, or is it still part of ongoing discussion? Yeah, it's going to take some time, right? The Cannabis Act is under review right now. That'll take a year, better part of a year, at which point then it will move towards becoming new legislation. So there's a good amount of heavy lifting to be done in the next 12 months or so, but I wouldn't expect that change in 2022 and maybe not even in 2023. Certainly wouldn't want to set expectations about what the government's going to do, let alone the timeline. But we think there's a very good argument for increased potency. And maybe I'll just get on my soapbox for 1 minute. There was I would say an unfortunate study that came out recently, which I think had the unfortunate conclusion that correlation is causation, which I think we all know is not true. And it was pointing to the increased number of cases of minors going to the emergency room with what they call poisonings. In other words, eating edibles. I can say that we've sold about 15 million packages of edibles over the last 2 years. We've never had one complaint about a child ingesting our edibles and having any kind of issue, let alone going to the emergency room. So I think, despite the reports, I think flawed conclusions that legalization of edibles correlates to an increase in ER visits for minors, and as a result, this is somehow problematic. That's not coming from our products. I mean, I think this is, it's fair to say these are coming from illicit market products, which have become much more sophisticated and more potent. There was a time where you would see 100 milligrams in a product. Now you're seeing 500 milligrams in illicit market products. At least that's what's on the package. Much of the packaging is becoming way more sophisticated. So it looks exactly like what you might see from an actual candy. And that is not that difficult to do. And the packaging, obviously, is certainly not expensive, child-resistant packaging that we use. It's an illegal product. So we're going to push really hard for a safe, legal alternative. I think that is the number one way to prevent children from, let's say, accidentally ingesting edibles. Look, I mean, I think we're still in those discussions, and we'll see where they go. Next question: do you plan to enter the U.S. at some point? Do you expect Quebec to allow edibles at some point? The U.S. is not necessarily on our radar today. There's a lot of bigger companies there that are well capitalized. Certainly, we have now operational expertise that we think is best in class, and so that would have some value. So it's not like we don't have conversations with U.S. companies, but we're still focused on the task at hand, which is really pursuing the Canadian market as it goes up another 100 to 150% from here, and a category that can double or triple from here. We think there's all kinds of runway without, let's say, taking our precious capital, investing it into the U.S. against companies that are much bigger, vertically integrated, have shelf space already. Would it make sense to be part of a bigger entity one day? Maybe, yes, but I don't think that means just a direct entry into that market. And on the Quebec question, I think the answer is yes, I do expect it, but I can't tell you when Quebec will legalize edibles. Just to back up one step, we do sell edibles in Quebec through the medical channel. So they are federally allowed. This is really provincial and SQDC policy that's keeping it out of the rec channel. So that's the change. It's not really a legalization per se. It's allowing them into the rec channel in Quebec. Next one here. For SKUs released in the next few years, what do you expect the owned versus licensed split to be? Good question. I don't know that I have an answer for you, but I think probably it'll be some time before, let's say, the ratio of owned versus licensed goes up. And again, I think this relates to our philosophy of looking at risk-adjusted return, being risk-averse, and trying not to innovate our way out of business, so to speak. But what we've developed certainly over the last 2 years is best-in-class skill set for production and distribution of these products, and we'll continue to innovate. So the ratio will go up, but I don't have a specific percentage split to give you, John. Next question. Ontario seems to get all your new products first. What is the reason for slower uptake with the other provinces? That's not always the case. It's a fair question. I think Ontario is our home market, and it's our biggest market. And Ontario has much more rigid, let's say, timelines for product launches. There's a very strict and set schedule where we go through preliminary and then final submissions to the OCS, and then there's very specific launch dates for delivering into the DC and then for product going into market. So it may be just a function of that. Some products do start out west, and some products do start in Ontario, but it's certainly not a philosophy. What am I most excited about for the company moving forward? Well, I'm really excited about the grown products for this year. They are fantastic products. We're excited about the price point we expect them to come out at, and the minor cannabinoids as well. And they're fun products. Both the candy-coated chocolates and the grown gummies have a really terrific chew and flavor to them and flavor profile. There's upwards of 15 flavors of different grown products. So, we won't start with 15, but we've got a long way to build to if the product catches on the way we expect. And then beyond that, assuming our plan works out the way we expect, I'm most excited about generating earnings for our shareholders. Next question here. Are you anticipating Whoops. Are you anticipating the accounts receivable to be improved compared in Q1 2022? I don't have a specific comment for you about accounts receivable. We don't give guidance on our receivables. Next one here. How do you view the balance of these metrics? Edibles share of the national market or INDIVA's share of the edibles market? Good question. Look, we always cheer on the edible share of market. I mean, that kind of defines the sandbox that we're playing in. And I mean, it's reflexive, right? We're launching products and growing the sandbox, and hopefully that's creating a bigger share. Sometimes we have competitors that launch great products that grow the sandbox, but obviously we want to be the ones that grow it. Look, I think they're both important. It's tough for me to choose, but I think all things being equal, we would like to launch products that grow the overall edible percentage of market, of total addressable market, and obviously we want to see our market share increase. Our market share really got to kind of nosebleed levels at 50% or thereabouts earlier in the year. I don't know if it's realistic to expect the share to go up from there, but launching new brands rather than just new SKUs, I think will be helpful, and let's hope increasing their market share and growing the total pie. Next one, after discussion of higher potency for edibles with the feds, are there any plans by the government to make changes in the near future, or is that pie in the sky? It's going to take a couple of years for the Cannabis Act to be fully reviewed and for our new regulations to come in. So that I don't, it could happen sooner, but I don't want to build any expectation. First of all, I'm not the government, so I'm not going to determine what happens. We'll try our best to influence what we think would be responsible policy in the interest of safety for Canadians. And, we think that means having safe legal alternatives to the high potency edibles that are still available, unfortunately, in the illicit market. Next question, do you foresee INDIVA exporting products? Yeah, one day, sure. I absolutely, we do. It's not a focus right now. Most international markets, obviously with the exception of the United States, are a fraction of the Canadian market. So less interesting to us. There's also a lot of nuance in the regulations and rules around exporting those products. So we haven't exported anything yet because the opportunity hasn't been enticing enough. But we do get a lot of inbounds from, the UK and from Europe and Australia and elsewhere. We just haven't really pursued it yet. It hasn't really made a lot of sense. But one day, sure, I hope that cannabis is legalized federally, globally, and that we can export, assuming there's a market to do so. Next question is December a record month and is Q4 a record and EBITDA positive? We are not giving that kind of specific guidance. We're not reporting Q4 today. You'll just have to stay tuned till mid-April. But what I did say was if you look at the market data for Q4 and you look at our market share numbers, I think you can infer that Q4 was a good number. Certainly will be sequential growth. We're just waiting for the dust to settle on whether it's actually a record. But that's as far as I'm going to comment right now. Any supply chain issues you anticipate that would impact sales or costs? Yes. I mean, the short answer, we've experienced supply chain issues just like everybody else in the world, thanks to the pandemic. So far, it has not been overly disruptive to our business. We're pretty scrappy and good at finding workarounds. It's pretty rare that we don't have backup suppliers, but sometimes it does impact margins if we, let's say, need a rush order of pouches domestically versus waiting on an import from overseas. Where it has more of an impact, really, Gord, is on bringing in new equipment where there's some unpredictability. When we can, we'll fly the equipment just to make sure that we've got a very clear timeline. Once something goes on a container and on a ship, it's a bit of a guessing game as to when it shows up. Next question, how do you plan on expanding the non-edible market? Is this a big priority? If you could shed some light on that, please be appreciated. Look, we do have the ability to, I'll give you two examples. One is Artisan Batch, where we've talked about a little bit already, where we'll continue to introduce, some of the best craft strains out there, high potency, terpene profile, freshness, bud size, bag appeal. We're getting better and better at this, not just sourcing it, but packaging it to make sure that we don't disappoint anybody that pays a premium price. The other area where we can have significant improvement this year, and it's not really baked into our numbers, is in the pre-roll business. We do have automation in place. We have the ability to make upwards of 10,000 pre-rolls per day. So this can have a very significant contribution. The other good news is that the smaller buds, what you'd call smalls in the industry, have come down dramatically in price. So there's some margin left over. So that's an area where I hope we can grow. Again, I don't agonize too much about how big is our edibles business versus our non-edibles business. We look at everything on its own and try and decide, do we have a core competency here? Do we have a product that delights our consumers, where we have any kind of competitive edge? I'd point out 2 years ago, we had 9% market share in pre-rolls, and obviously a much less competitive market. We didn't make a lot of money selling pre-rolls because we were doing these with rocket boxes manually, and I don't know anyone can make money doing that. We've had automation come in since then that we've not fully utilized because our focus really has been on the edibles market, and I think that was the right strategy, right? We did $1 million of revenue in 2019, 15 million in 2020. Not going to give an exact number, but certainly north of 30 million for all of 2021. And we're hoping to not quite double that, but almost double that number again. We spend probably less time worrying about the percentage of edibles versus otherwise, and more focused on can we launch these products nationally, profitably, and continue to get repeat sales. Next question, how are sales of the new sleep gummy so far? It seems like an interesting product. Yeah, so far so good. It's been taken up well. And is one of our better SKUs. So we're optimistic about that, and it really is only just hitting market now. Next question. I think you have a great company, but the Wana uncertainty has some people a bit spooked. Is the license agreement with Bang more robust in the event that Bang were purchased by other larger companies? Do you consider purchasing brands, not necessarily Bang? So a lot to unpack there. Thanks for the compliment. I think we've addressed the Wana dynamics. If people are spooked, I guess it's because they don't want to see us get a cash payment that's greater than our market cap. In terms of the other agreements, what happened with Wana is unique to Wana. So there's no, whether it's Gruen or Deep Cell or Bang, there's no instance under which a change of control of the licensor would affect our ability to keep selling the product. So, Wana had that built in because they're Wana, good for them. Certainly, it's been, this deal with Cannabis is obviously great for them, but we don't face those kind of risks in our other deals. The last part of that question was, have we considered purchasing brands? I think if we had a market cap that was anywhere near where it ought to be, I think we'd be more willing to look at doing that with our stock as a currency. But we're just not in a position to do it. And the truth is, I'm not sure that that's necessarily the right strategy for us either. So, but stay tuned. You never know. Everything depends on price. What capacity are you at your factory for increased demand? Do you need to physically expand or just add second, third production shifts? Great question. We have lots of capacity left. We do not need to add. Right now, we basically run double shifts Monday through Thursday. We run a single shift on Friday, and we only use weekends for overtime as needed. We do not need to physically expand. Our 40,000 square foot facility has plenty of space. And the automation that we're bringing in actually increases our productivity further still. So, our CapEx for the year, again, less than $1 million. That includes all the automation that I've described. And we've got plenty of capacity to grow. Who are the folks in the picture on this slide? Sorry, I'm not even sure what slide that relates to. I'm going to keep moving. I really do read these real time. So whatever you ask.
No, it's the one actually that we're looking at right now with the digital images.
Right. Maybe I'll back up to a product slide. Okay, so not naming names. Next question. How many NDVA shares have been shorted? I don't know. Last time I've checked, it was a very, very small number. That's probably all I should say about that. How close is the 40% gross margin to steady state? Well, look, we're not at 40% now, so I don't think it's fair to call it steady state. Going forward, I think that's what we hope our steady state will be. We'd like to exceed that. Some of it just depends on how much top line growth do we get down the line. We have a significant chunk of fixed costs that we could continue to leverage. But I think if we hit 40% and stayed there, I think that would be pretty good. Obviously we'd love to get to a higher number, but I'm not comfortable guiding any higher than that now. What is the reasonable range for free cash flow or EBITDA margins? We've never guided to that, so I'm just going to skip that one. We don't give free cash flow or EBITDA margin guidance. Next question: can you talk about the difference between the WANA license and the ones you have with other companies? Yeah, I think that's been asked and answered. There's no change of control clauses in the other agreements, so we wouldn't face any risk there. Next one: do you believe the recently released revised AGCO rules are positive or negative for smaller players? And INDIVA, can you briefly explain the new rules? Great question, David. I'm glad that I read them before this. They just came out today. I think it's a positive. Without getting into too many specifics, we have obviously a more limited marketing budget than some of the super capitalized companies out there might have. But a lot of the techniques, whether it's pay for play, paying for shelf space, sending bud tenders on trips, all these things are now going to be strictly forbidden by the middle of the year. And I think anything that levels the playing field is beneficial to us. We think we have the best products in market, and I think our entire marketing budget for 2021 was about $2 million, which might sound shockingly low to other companies that seem to spend that on a monthly basis, but we've still managed to capture #1 market share in the products that we offer. So, look, I think the changes are actually a net positive for us. And I guess if I had to sum up what the changes are in a nutshell, the AGCO is trying to prevent licensed producers from essentially engaging in direct payola for shelf space, minimum quantities being moved, or for, let's say, blocking competitors from entering the market. And I think if anything, we've probably been a victim of those things rather than a benefactor. So I think net is positive for INDIVA. Next one, I know it's a touchy subject, but you have a backup plan for the WANA deal. It's not a touchy subject, and I think in terms of, do we have a backup plan for the WANA deal? No, we don't have a backup plan for the WANA deal. We have a plan to grow INDIVA as a company. I think signing the deal that we signed with Gruen is a perfect example of that, where we'll keep introducing new products, and there's still plenty of time on the clock with WANA. I don't know. It's funny. We've still got 3 years left with the WANA deal. That might sound like a lot of time. It doesn't feel like a lot of time to us, but I'm sure if most investors asked me, or rather if I asked investors to wait 3 years for a result, you would say that's way too long. So is it a little bit of time? Is it a lot of time? I don't know. You tell me. Next question here. I'm sorry, I'm not sure I understand. Is your Coke level market share the plan? Oh, Coke level. Yeah, sure. Look, I mean, I'm actually quite hopeful that we'll see our edible market share go back up once we launch Gruen products. So that's not till really in earnest the second half of the year. We've seen our market share kind of stabilize in the mid to high 30s here, which is great. Look, hopefully some of the new SKUs that we're launching from WANA and from Bang and Ruby and the Jewels, as well as launching the Pips and Pearls from Gruen, hopefully we'll see that market share rise in the second half of the year. Next question, again on the market cap. I think that it's more of a comment. It's frustrating to see the current share price, given we're continuing to deliver quarter after quarter. Yeah, it is frustrating, and we try not to obsess over the share price, although we're as motivated as anybody to see it go up. Management and insiders own a lot of stock. I can say I personally have friends and family that have invested millions of dollars into the company alongside me, so and alongside our whole team. So we're very concerned where the stock price is. We want to see it go higher, but the way for that to happen is to be results driven. There's no promotional activity that's going to make the stock price go up long term. The business has to be successful, and that's what we focus on 99% of the time. The other 1% of the time we watch the stock price. Next question, are any other partnerships in the coming year? We certainly hope so, but you'll just have to stay tuned. How can we as investors help promote your company and stock? I think the number one thing you can do is go and buy our products and recommend to all your friends and family that they buy them as well. I think that's how we get to earnings positive, by growing the top line and by staying disciplined on cost and printing those net earnings. Yeah, I think we did answer that one. Next question, does Indiva still have 4 of the top 10 SKUs at the OCS, and do we have similar stats in other provinces? Yes, I believe we still have, according to Headset data, 7 of the top 10 edible SKUs in BC, Alberta, and Ontario. I don't have specific OCS data. That's in the edibles category. In terms of do we have 4 of the top 10 overall SKUs at the OCS, I think we have 2 of the 10, but still really good performance from Indiva SKUs relative to the 2,000 SKUs that are out there. Next question, is there any cash payout past 3 years? The short answer is no. Thanks again, John, for the Wana questions. I think I've explained this several times on conference calls and in our press releases. But if for the last time here, if the federal legalization does not happen inside the remaining term on the Wana agreement, obviously Wana can choose to terminate. I think that would be horribly disruptive to the product in the marketplace. I don't think Canopy is in a position right now to make the gummies under the cost structure that we do and at the volume that we do. I can say that because nobody in the country has our skill set to make these kind of volumes and distribute them the way we do. Look, I think if you're concerned about what will happen in 3 years, then maybe this isn't the stock for you. But we're not done building this company. I'd point out that Wana's only been in market for about 18 months, and we only signed that deal with Wana not even 2 years ago. So the idea that we can't find creative strategies to continue to grow this business, regardless of what happens with Wana or what iteration we finally see, I'm willing to take the other side of that bet all day. Next question here. Do you see any future partnerships happening with movie theaters? Honestly, I never thought about that. I think that would be interesting. I think it's doubtful. Movie theaters are not really age-gated environments, so it certainly there's, I guess, certain films that are age-gated, but I don't think the concession stand is age-gated. I'm much more optimistic about what might happen with bars or restaurants one day. Certainly it makes sense for it's good follow-up. Yeah, the VIP Cineplex. Yeah, look, I guess it's possible, but on-premise consumption is still forbidden in this country. So I would call it a maybe, but again, still much more keen to see what will happen with restaurants.
There is one last question from Andrew, and we'll wrap it up there.
Yeah, I mean, in terms of how many shares are owned internally, we try and spell that out on the third page when we look at our cap table, but we're just north of 20%. So you can multiply that out. Where I include Prairie Merchant in that because Russell Wilson is on our board, so kind of call that indirectly. But if you were to exclude that, it would still be north of 10%. Okay, thanks everybody.
Thanks everyone.